talking anyway. So
We're just reliving the day.
all
That's
right,
not
very good.
that's
So
not a problem.
I just started recording. All right, let me
Okay.
auto accept all requests. Is that what I should do? It says release.
Share
Click
screen.
on you. Oh, I think waiting for John to control your screen. Oh.
Oh
Like,
no.
you're like, oh no.
No. Yeah, because
Abort
otherwise.
control. Okay, abort control.
Yeah. Abort control. Abort.
What is there a way for you should
Participants. Oh, I think if you click on the participants tab.
okay.
And then you is there like an icon on my name where you can give me screen
More.
view option, request remote control, annotate, zoom to fit.
Chat, stop video, make host. Can I make you a host?
Try, I guess, and see.
Do you want to change the host to John Troy? Okay, let me press okay.
You are now the host. Share screen. This will
Oh.
show up the other person's screen share. Yes, and then I'm gonna do screen one. I think you have a wide screen monitor too.
Yeah.
Okay, is my
Yes.
Okay,
Yeah.
awesome. Okay, so in fact, I was looking at micros today, but this is where I spent most of the day. This is where I spent most of the day living. So the way that I guess the way that I've been approaching basic market structures is levels and lines is kind of what I've been internalizing it as. In terms of the levels, I actually, even though I've been living in the 1 minute chart relative to activity during the day, when I go ahead and set my levels, I'll either go out to the 5 or the 15, and I really haven't even set levels. I jumped in today without doing it, unfortunately, but I'll click over to the line actually just to make it easier.
Okay.
And then once I'm in the line, like, you know, I basically just take the view that I have and I just simply scan top to bottom, and I look for touches, so to speak. So in this case right here, and I just go line, like right here, this could be a level. Oops.
Yep.
Oh, right there.
The horizontal line option, was there not?
Yeah, there's a horizontal line right here. Now that we have more data, this could be a level right here, albeit it's a little smaller. Maybe do an adjustment. And that's literally all that I'm doing is I'm just doing a quick scan, and I'm just visually looking across, just go touch. And I have some older ones here, and then I need to go in and mark the LISs. The LISs, yep, the LISs that you call out. But really that's what I have. That's really what I have here for levels, and it's no more complex to that. The ones that I just drew are the ones obviously that we just drew, but the ones going here from all the way across the screen are prior levels from replay sessions that I had. It went ahead and actually kept it there. But what was really cool to see is that the level drawing that I'm doing, you know, like right here was activity on the day, and it came up to this. Well, okay, we just drew that level. It came up. My levels have basically been recognized, so to speak. I know they're not like pristine or the most accurate, so to speak, but very quickly using this process, pretty happy with it so far. Like it's been cognizant of in prior activity. It's been cognizant like okay, there's a level here and it's pretty reliable. Like when we started to go down, I could see there was another level here, so to speak. In fact, this might, you know, this one right here where we had 2 bounces, you know, might be a level as well too. So I just
How do you
pop
find
that.
the Tradovate charting to be working out for you? Well,
It's okay, so to speak. I think that you know, from the screenshots that you share, from the screenshots that you share, I can definitely tell there's more leveling in the Thinkorswim application and more traditional charting. However, long term, I think Tradovate as a platform, like how they built this application, this application like completely makes sense to me because I also build programming tools in the same technology that this was built in. So if I go over here to the Code Explorer, like I just spent some time going through here, like
it really shows you all the codes in the background or something.
shows the code of how like simple move. It shows the code about how simple moving averages are done, and all that kind of stuff. And then like down here, I found a stochastic with 80/20 lines on it that was added in, and you can just see the code for like, oh, so if I want to build like custom modules, I this all makes sense to me, so to speak. There's some details in here, but anyhow, so case in point, to answer your question directly, it's I think depending on how much you are using it or how long you've used it, I think there's some aspects that can be frustrating or quirky, but I understand why it exists, and I've just made the emotional and intellectual decision to just kind of work my way through it, so to speak. So it doesn't hinder my ability to make money, so to speak. So I'm not, and I don't think that it creates additional edge for me at this point.
You can always so there's a platform called TradingView, and it's free for like a little bit, but if you wanted to pay for it, I'm not sure how much it is. But also Thinkorswim, like TD Ameritrade, if you open an account, they will let you use the charting software as long as you have like a penny in the account. So I used to trade with them, and when I took all my money out, I left like $4 in the account just so I could still use the charting software.
That's awesome.
It's literally the best. So
yeah. Okay. Yeah, I don't feel that it hinders me. I wish you could put notes on the line like there's like to have the LISs marked, but I'm just going to use a different color for that, and then just kind of live with it, because I think sometimes the date might be germane, because I really like that actually on some of the screenshots you shared. Yeah. But otherwise,
I want to know if it's recent or if it's older. I feel like more recent would be a little stronger than if it was older.
Right.
So especially because like the one I just did for ES, literally yesterday and today are the same exact LIS. So that shit is going to be super strong. Like,
okay.
Yeah. And it's like somebody asked in the chat today, like, so does it mean it would just never break? And like, no, it doesn't mean it wouldn't break. It's just really strong either way. So like if it broke, you might as well take a short like 100%. And if it bounces off, like go ahead and take that long, because it's just a really strong level of confirmation whatever way.
Okay. That's awesome. Yeah, I'm gonna start integrating that in.
Yeah, so I like that you put the levels, because that's pretty much what market structure is: knowing the horizontals, and then being able to see with your eye which way it's moving, and then is it breaking that structure, right? Is it breaking those horizontal lines or not, on its way up or on its way down?
Right. Yeah. So that's where on the so horizontal breaking structure up and down. I also started charting the diagonals. So if there's a head and shoulder, which was kind of nice in a couple. I think I deleted maybe some other ones, but case in point, I don't even think my diagonals are that bad, so to speak. The head and shoulders pattern is obviously a very significant and very distinct pattern in and of itself. Right. As prices are going ahead, and as prices are reporting and going ahead and escalating, between levels, that's basically kind of what I'm looking at here. Obviously I have a couple different levels that marked, but if you look at where this peaks here and then this bottoms down here, these are probably the two more significant levels. It bounces here, finds a point, and then kind of continues on, so to speak. But on the diagonals, I'm basically looking to see is we're basically shorting down to a particular level, and where do we break? Where's a potential break point to move back into a long structure? And that's where, as soon as I saw this in the afternoon, I was like, okay, we're going to get ready to move. And then right.
Yep. I have a book I should share with you. I think I have it on my phone. I could probably even like email it to you. It's called let me see. I have it in my Amazon book or audio. Let me see if I have it in Audible. I have to. It might not be library. Let me see. Shit. See yourself. Okay, no, it's not an Audible. It's one maybe my Apple books or something. iBooks maybe. Here, let me see. Oh yeah, here it is. It's called Price Action Breakdown from Larmy Damir. He's like French, I think, or something. Anyway, it's really, really cool, and it shows you the areas where it starts to consolidate like that. And that's what they say. They always say you want to be in a trade when it's kind of sideways or stagnant, because that's right when it's like, then a huge move is going to happen. So it's like you want to be in before the move starts, but obviously you have to understand like which way it's going. So you would have to kind of figure that out. And we wouldn't have known that obviously this bad news was going to come out, but it's kind of indicative that probably a lot of big banks knew, and somebody, you know, obviously a lot of people knew that aren't us, you know? So
Oh yeah.
they're not trading or they're sideways, whatever, but it's also lunchtime. They love to do these things where they came out with this information at 12:45 when they know nobody else is going to be like, no one's in a trade. No one's really looking at their computer, because they don't want people to capitalize like on these moves that we did, you know?
Oh, 100%. Yeah, I went ahead and I know a guy who's a hedge fund manager, and I hear things from time to time, so to speak. Not, you know, not breaking the rules, but it's
Right,
like,
not like
are you
inside
sure?
stuff, but yeah,
Yeah, are you sure that's not breaking the rules? It's like, no, it's not breaking the rules, but it's, you know, people will question it, kind of thing. Yeah.
or like how the brokers are prohibiting people from shorting oil. Like, how can you prohibit somebody for, you know, it's like, what?
Man. Yeah. How can you restrict the action? How can
Right.
you restrict the action, so to speak? So
Is this the short you took at 11:30 or whatever, that where it has the doji? It's like green all the way up, and then to the left a little, keep going to the left. Yeah.
yeah, it was right. It was right in here. Yeah.
That one.
I
That.
Yeah, I did take a couple actually.
Look at that level. It hit the top of that level and just flushed.
Yeah, and this is actually an old level. This is actually an old level too. So when I see something like this, I get inspired from the standpoint that I did something reasonably reasonably close, so to speak. Yeah, actually, kind of where I'm jiggling the mouse and moving it around. This area here is where I saw the 400 orders came in. So I rode this. I just rode this. I rode this down to about kind of like here, basically. It's like, okay, we're going. And then go ahead.
Do you see this little, so to your left a little bit, move your mouse to the left, keep going, right in the middle there, that little baby candle, the little baby red one in between the two, nope, keep going, sorry. Keep going. So
Oh yeah, right here.
So see how that one is kind of stayed still for a second. Like you could have, even if you had gotten out already, like, oh, you took a few $100s, you could get back in here, because see how it came up and touched your level and then rejected again.
Oh, I see.
And you can tell because it's a small candle, it wasn't like flushing down. It was kind of giving people time within that minute or whatever this is, 1 minute, to really kind of like get back in or see what's happening. If you were like, oh, if it rejects, I'll take a short, off this level. And if obviously if it goes above that level, then maybe you have a tight stop loss. But that would have been great. And you were in the trade anyway. But if I would have missed, if I didn't get in at the beginning and I had your level like that, and then I see, oh, it's coming back up to this level, let me then take the short then.
Okay.
Oh, and I was going to tell you about that earlier today too, on my chart really quickly before you continue with the market structure. So did you see earlier this morning, we took the long and obviously it ran a lot further than I thought it was going to. And then it came back down, and I said, I wasn't like calling it an alert, but I said, hey guys, watch the 2814, because it could come back to this level and go back up. So what that's called is a retest of the high. So it went up to the high of like 2020 or whatever, and then it did a retest. So what it does is it comes back down, it tests an area of like strong support. It went all the way down to like 2808, which was a strong support, and the 2810. And then it moved all the way back up to 2030. So it made new highs. So that happened this afternoon too. After the flush about the drugs, you see how it moved up. So we were all like, you caught the long or whatever. I know someone else in the room, he was playing in the sim and he caught the long, but then that was really like a retest. So it pulls up, people are getting out of their positions of the really big short, but really they're getting out of the positions, it's pulling up, it's retesting, and then it's going back down. So if you would have gotten out of the short and then take the long or don't take the long, whatever, but then you know that it's really just a retest. And as long as it doesn't break market structure of where the short started, you could get back in for another short. And then it was perfect. So
I did that a couple times on this, where I'm moving my mouse on what my clock calls 1212 from right. I think it was right in here on this run up. I actually got in and out of this a couple times. and caught multiple points in there. I think my downswing kind of came through here. I was trying to catch this. I was trying to catch this on a breakout, but it was just continuing to go until we reached this point right here.
Yeah, and that's the trade that you did catch, though. That was good. And then remember, I was like, oh, it might go back up to like 14, 15. And that's exactly what it did. And then it turned around again. Because, see, that area is obviously really strong.
Yep.
Right? What did it go to? What was the high there? 13?
Like basically 13. Yeah, it just tested right. It tested right at 13.
That's what I'm saying. Even if you just watch one product, and this is why I don't trade like so many different things. If you can focus on one product and you see what it does, when it does, and kind of like how it reacts at certain levels, you are like, that's all you need. Because people will be like, oh, I need all the, and like, I know you like using your indicators, but they're like, oh, I have all these indicators and I paid $5,000 for this software. It's like, you don't need that. You can literally just watch the candles, draw your levels, and make your moves off of that, because it's just so like, it reacts so well off of levels and just the candlesticks. Like, just watch the candlesticks.
No, I totally agree. I've kind of gone a little bit of, I shouldn't say indicator crazy. I can't have like 30 indicators, so to speak. All the indicators are awesome, I'm sure, but I think I landed on a couple that I'm probably going to be happy with.
That's good. Yeah, I have the EMAs on a few of mine. I do different. I do 9 and 35, but other than that, I don't really use. And then those pivot, those little dotted points. So that's part of like Thinkorswim is the pivots, but I think those come in really well. Oh, somebody knew.
Oh, okay. Using the pivots as the pivots is okay. I worked with go ahead. I was working with those the other night. I didn't put them on. I think I'd rather just do levels by hand, so to speak. But I know what you're talking about there.
Yeah, and I don't know why. Like, I don't really know how they're calculated. I think obviously it's some type of action with the day prior, because you'll see if it runs, like if it's a really, really big day, like either direction, then the next day the pivots will be wider apart. But if it's like a tight coil day, then the pivot like spots will be tighter together for the next day. And like, but they are pretty spot on. And sometimes they'll be spot on with some of my levels too, but they'll just be really good areas to either say, this is where we're going to go to if it's moving up to one of those, and it could like reject from there, whatever. Or when it gets there, it might kind of go sideways for a little bit. So that's what I've noticed. Okay. But yeah.
Okay.
All right, cool.
Totally makes sense.
All right. So how are you feeling, Sue? Do you feel good about this lower market structure on the lower time frames?
I do. Yeah.
Good. I just want to make sure you can see it. Like I said, if it's easier for you, to do it this way, then that's fine. You don't have to do like, the big arrows or anything. My eyes it's so easy when I do the arrows.
Yeah. No, I think the smaller time frame at least is I'm sure at a future point I will probably, as my success continues and my opportunities to get into other products, clearly I don't think I could do this with multiple products, so to speak. I'd have to graduate to the 5, but considering that I'm basically onboarding to this onboarding to this platform, into this process with kind of like minimum financial entry point. It makes sense. It makes sense for me to do it this way. Whereas like if we were like running micros tonight, I could just easily go to the 5 minute. I'm like, okay, this is the fundamental, this is what it's at, let's go kind of thing. Whereas like today I'm literally in felt like the heat of battle, so to speak, and I'm just in there, I'm working with the DOM and all those kinds of things and whatnot. So yeah, I think this is maybe a little more intense than the average bear, so to speak. But I'm fine with it. I had a net positive outcome. So
no, you did really well. I'm really proud of you. And hello, you made like 20% of your portfolio. Like, who makes that in a day? People don't. Like, people try to make 1%, 2%. Like, you make 20%. Like, get out of here. That's awesome. And you weren't even utilizing all of those funds at any one point in time. So it's like, it's crazy.
No, like I said, I'm just laying out one contract at basically at 3% risk, so to speak. So that's really good. And then the some of these indicators, the last one I added was the stochastic with lines. This one actually, when I was just kind of going through and just learning and just researching what an indicator is or how it works.
Right.
This one actually really helped me today, and it was the last thing I
overbought or oversold, right? Is that what that means?
I'm gonna yes and no.
Does that too?
I'm gonna just explain. Okay, maybe just a quick conversation. This is at least how I'm using it, and like I said, I am completely emotionally and intelligently open to like critiques, criticisms if I'm using it the wrong way.
No,
But basically, I drew this. Once I hit 2 peaks right here, I'm like, okay. Okay, so here's how I analyze this spot. Basically, we have a run up. The slope of this is starting to level off. I saw the tweezer top and I saw the big 400 order, and I was like, okay, smart money knows something. We're going to take the short. Right. So we ride this one down, and I think we get out kind of about in here. We let it do its thing. We let it do its thing right here. But basically, all of the EMAs are pointing down. So the slope of 200 white is down, the slope of 50 blue is down, and then the triangular is just starting to crest over, and then the stochastic is just basically measuring. Again, this is kind of like directional velocity is probably just the wording that I would use for it. So so each of these blue lines represent 20% away from the edge. So when everything is pointing down, this means I always take it in a down mode. This area is accumulating wealth, so to speak. So we're coming down here to the wealth zone. And given the fact that we're basically the fundamental direction that I'm being shown, that's probably the better way of saying it. The fundamental direction that I'm being shown here is that everything is moving to the short. That's the fundamental way. When we come back this way, we're basically moving against fundamentals at this spot. Granted, we could make money in a long position back here, but all we're doing is we're reaccumulating value. Yes. Right here is kind of how I look at it. So now basically we've reaccumulated value, and then this is, if you can just get it right, this is a great spot to go ahead and basically now start take another short because that's what take another short because that's what the fundamental is, and it flushes out. Right. It's just there were a couple times, like there were a couple spots down in through here. I got wicked out as like, oh, is it gonna take the reverse, or is it gonna move higher? So I lost some value in here, and I just need a little bit stronger confirmations. However, where that comes from is what I saw in the replays is, I was like, okay, how's 50 going to move? How's the 50 EMA going to move relative to the 200 at this point? Because we're starting to lose a little bit of slope here. And I was like, oh, we're stepping sideways. So we're either going to go back up in the kind of the direction that we did, or 50 is just going to move laterally over. But then as soon as I saw this engulfing candle fire off, I'm like, okay, smart money knows something, and I got in basically right about here, and then I just stayed long with it because, again, my extremely naive opinion is that this is institutional activity right here in this back and forth pattern, given what we've seen, and they're basically just kind of clearing everyone out to go ahead and start moving back up. So I got in here, sold here, rebought here, got in here, and basically once I got this first flag pattern, so we went up in terms of the structure. We flagged out as soon as I got a reversal right back through here. I drew from, in fact, you can actually see the dot. I drew from here to here, and I drew from here to here, and basically we went ahead. We accumulate. I sold here, bought here, sold here, and I just wrote it. I wrote it right around here, and then I got in, and I was like, okay, wicking pattern here. And then I was like, okay, where's the fundamental going? Is well, 50 still wants to move into 200, but our slope is pointing up, and that's where I would love to have it. I mean, I may have to code this myself. I would love to have like an actual numeric data point for what the actual value is, rather than just like, putting my face literally dead ass into the monitor to see what, to see where the tick is going. Well, I'm like, okay, so we're basically flagging out again. We're in the same pattern here. What's the direction? I'm like, okay, everything is pointed. We're still pointed up, so let's go here. And then I bought here and took here, and then I was kind of out of action through here in the remainder of the day. I took a couple spots and gave something back, and I kind of gave something back here in the chop. I thought this choppy area would do, because it couldn't quite, the candles were basically kind of stagnant, like they're deciding, the market was trying to decide which way did it want to go. Right. So to speak. And then over here, I was actually watching this, and I pretty much I gave a little back, gained a little back, was kind of neutral in this area. And then as soon as I saw these big engulfing candles, I'm like, oh, big money just wants to play big money right now,
Yeah.
quite frankly. So I'm like, I just have to sit on, I have to sit on the sidelines. But what I take away from that is, once this engulfing candle comes off, just in terms of how this is the last thing I'll mention as we're getting to the end of this segment here. How I internalize that relative to the indicators is that, by and large, the ATR is a little higher here, actually a lot higher at 3.8 relative to how the day went, because I just have an internal feeling, or just I'm reading the data points, and I'm okay. So I'm talking too fast. This is a poker concept that we teach at higher stakes. It's basically, how do you navigate infinite complexity relative to GTO? I'm not sure if you ever used a solver in poker like PO Solver or any of the other products,
Yeah.
but how do you deep stage the navigation or knowledge to infinite complexity, which the market has an aspect of that too, poker has aspect too. I'm trying to take what I see and simplify it in the simplest wording that I can. So like, oh, what's the fundamental? What's the direction? What's the basic slope? And then make a decision based upon that. I'm taking that same skill set with poker and just applying it here from the standpoint of kind of where things are going. So the EMAs are now pointed down. The big boys have come in at play, and then the stochastic. If I look here, the bottom half of the chart in a short direction is basically just value. So whoever had positions of the short, value all the way out to here. Now they go ahead and now you go ahead and start giving it out back, so on and so forth. But that's kind of how I've been internalizing the process, and for the most part, like I said, I think given what I've seen or internalized, and the 1 minute chart just gives me action, is basically the biggest thing. That's probably why I've gravitated towards that, because it gives me the most opportunity for granular feedback and how the EMAs perform, and then the ATR gives me velocity, and then the stochastic gives me some other kind of value. Are we in value accumulation, or are we in the expression of value relative to which direction it's going? And that's just basically how I manage my day. But like I said, I think the biggest thing is I need to either be a little more patient with confirmation, or suck it up with a slightly higher few ticks on the stop for the ATR, just to avoid how institutional behavior occurs earlier in the day. But
yeah, either early in the day or especially in the afternoon. Like, I've also noticed, and this is what I was saying the other day, about really looking at your clock when you notice something happening, because I noticed from 2:30 to 3 is the choppiest time frame for me. Like, I'll try to trade in at 2:30 to 3 Eastern Standard Time for some reason is so choppy. And then 3 to 4 usually we'll start to find a trend, or at least 3:15 to 4. And then I'll be but yeah, so I always suggest people are really looking at their clocks when they notice something happening, and see if it happens quite often around that same time. Also, if you are thinking of taking obviously several trades a day, if you're working off the 1 minute and you feel like you can scalp a good amount, then you might be interested. And I would just obviously on your own look at your performance center and look at how much you're paying each day in fees and commissions, because currently I think we're paying like $1.20 or $1.50 per trade. But I know they'll cut it down to like maybe 50 cents a trade if you do that $99 a month.
I got smashed on fees today relative.
A lot.
I want to call them up and ask for rake back.
Yes, right? Like, can I get a little? Can
I get a room comp? Can I get a room comp at the Encore in Boston or something, wherever you guys are located or at?
Please.
I need. Can I get a room comp? Can I get a room comp? Click here for previous sessions.
So you can go to,
Very good. Yeah, I mean, I paid $195 in fees today.
You would pay like a third of that, and then you'd be paying like $99 a month or something. But I haven't fallen into that, because I feel like then that will promote me to trade more, and I'm trying to trade less. So I haven't done that.
Okay. Yep.
Obviously,
Yeah,
it's
no,
someone-
I know what you mean.
there's one that's unlimited and you pay, it's like $200 a month or it's like $250 a month or something. I know it's $2,500 for the year, but you
Yeah.
get unlimited trades with no fees, commissions, whatever. So,
Yeah, I think depending on how far I go,
right.
obviously that's a that's obviously that's an option, that's an option, so to speak. But yeah, given the fact that I just pounded this out on one day, I'll have to ask them. I will have to ask them. I think I did the $99 reduced one already, but I'll take a
Oh, you
look at
did?
my plan. Yeah, because I think this is against the reduced, because I took
Oh
I
yeah,
took six.
multiply your contracts. Oh, yeah, well, number of contracts. So 104, because each contract would be like $1.20.
Okay.
Or you took 62 trades. Yeah, I don't know. Because it's a trade, but like, you could have multiple trades in a contract and multiple contracts in a trade. I don't know. 100, if you had 140 contracts times $1.20, that would be 168. So no, you might be on the regular. You might still, I don't know. Did you sign up for the 99? If you did,
I will check. I will check that. I will check that.
have to. Like, people have asked me and I said, wait to see kind of like how you do and how things are going. Cause I'm really only trying to give out 3 to 5 trades a day. Lately I've been doing like 10, but really,
Right.
oh yeah. What is that? Your membership? Active Trader. Oh yeah. You're paying $99 a month.
Okay. Yeah. Price 90.
All right. So you just want to, just look into that, because I think it's like,
I'll send them an email and ask.
yeah, because it's definitely only supposed to be like, you're supposed to be reduced down to like 50 cents a trade or something like that.
Okay.
This isn't like on the website. Anyway, all right, let's jump back over, and the market's gonna be open soon. Let's jump back over to me. We'll look at some long terms, and then we don't have like really too much.
Okay.
Can you request remote control? No. Can you just give it back?
Hold on.
Okay.
Stop share and then more.
Oh, should I share?
Okay, I will make you the host. I will make you the host again.
Oh yeah, it says you are the host now. Okay, cool.
Okay, awesome.
All right, so then let me share, even though my desktop still shows here my Thinkorswim. Let's do that. Okay, perfect. Can you see my screen?
Yeah.
All right, great. All right, so today we're doing long-term analysis when it comes to market structure. So that is going to be really anything 30 minutes and above. So 30-minute, really more like 1 hour, 4 hour a daily. So this purpose would be if you wanted to take something as a long-term swing. So this might come into place if you want to get into a stock that you want, now that things are pretty low, that you want to buy and hold. You would want to find like a good entry price and a reasonable exit. So we can actually look at some stocks to do this, because it will be like a better example than the S&P.
I couldn't, when you said Gilead was the cause of the drop, I could not log into my Fidelity account fast enough and put the market sell in that.
Oh my God, it was so bad. Did you see that thing went down? And I forget how much percentage. And I'm like, yeah.
Yeah. I still even had more in it. I bought them on they were my coronavirus play, so to speak.
Really?
Yeah. So thankfully I still even had a little bit more in it, but yeah, I'm out of there.
Good. I didn't even know. It just started dropping. I was like, what the, like obviously something was happening. Like it was clear something was happening. I just didn't know what. All right. So this is a 4 hour. So I'm just going to minimize it. This is taking me back to like December. And I'll show you, when you do the longer term ones, you don't have to worry about the smaller areas. I'm just going to do more larger swings of the arrows. Let me grab this. Oh yeah, I can move this. I did that last week. All right. Okay.
Quick sidebar question, germane to money and finance. Is there a talking head program that you like or listen to during the day? Like just leave CNBC on in the background, or like when news like that comes out, or a Sirius XM channel, or anything germane to news?
Yeah, no, I don't. I probably should, but I don't. I really don't like. And that's what. So I'm sitting in like it's like Preston's playroom. So it's like a den, and I have my desk like literally in a closet. So I
Okay.
thought about like putting a TV on this wall one day just for like his playroom and for me to listen to like news and stuff. But I really haven't, because I try not to let news like affect me, but obviously things happen. But that drop that happened today, you know, it's happening before they even put it on the news. So it's not like they're giving you a heads up.
Okay.
Anyway.
Okay. No, that totally makes sense.
But yeah, but I know people that will listen to podcasts and they say they give pretty good advice. Like,
okay.
So, but I don't know which one. I could find out, but
okay. No, just curious.
So with swing term analysis, long-term swings, we wouldn't need to be like charting off these little areas here. Do you see? So these are 4-hour bars. I really just want to make more of a swing of like price that has moved. So here, obviously I'm going to do that because it went down and then came down here. So same concept, pulling over. I already have this marked. So that's obviously a big level. And then these, they're kind of in the same area, but not.
Yep.
But really, we're just doing it in more of a larger fashion because we want to see for a longer time frame what our levels be for the longer time frame, because we don't care. Obviously, if you're saying I'm willing to hold Apple, I don't know if you've ever traded options. Obviously, you could look at this.
No.
Okay, so for options, there's like an expired contract, so you could clearly say, oh, for Apple in a month or two, where do I see it going? And you would have a pretty good idea off of a longer time frame when it comes to like market structure like this. So
okay.
So let me just draw this out and then we can go through it. Especially like I've told you before, higher time frames are going to give you stronger levels. So these levels are really and that's why it would be good for like a longer play, because when you're in something longer term, you're okay with, oh, one day I'm down a few hundred, the next day I'm up a few hundred. It's a longer play. So you're not looking for that mini scalp. You want the bigger move. And so that's why we don't have to worry about these little sidebars, because it's like, oh yeah, this day it was red, but then this day was green and this day was red. Like, we don't care about that. Like, or this 4 hours, like we don't care about really each day. We want the overall trend and what it looks like with market structure it's going to do in the next like 2 to 4 weeks or month or 2 months. So, and where those levels would be. So obviously on the higher time frames, if you were taking, like a long here, you would know that you might come into resistance in this area, things like that. So that's what you would want to have marked out on a longer time frame. And I told you my dotted, like my dots are like dailies and 4 hours, because those are higher time frames. So they're going to give a higher reaction at those levels.
Okay.
All right, like this 250. Look at this 250 for Apple. All right. So obviously, and for all of December, I think that's what this was. Can I extend this? I guess I didn't pull it all the way down. So this is like all of December going into January, where obviously everything, including Apple, was grinding higher. So, obviously you're in a long here. And then this was a little bit of a choppy area. It didn't, it stayed in this zone. As you can see, this was like the area that it formed at the high and never really broke through it. So if you could see this this is January 17th to February 20th, it was really just a chop. So you could, make an assessment that if it's not breaking this structure, it's most likely going to go down. It tried 3 times, 1, 2, 3 separate occasions, and it wasn't able to break this structure. So at this point, or even at this point, you could have taken a short, like with just the stock in general, or an option, put it for a few months out and see what happens. And obviously on this case, if you would have gotten in here, it would have gone down a little bit. I'm sure you would not have sold at that point because it was only like $10. And it came back up, but it didn't really come back up much against you. So again, with a long-term analysis or long-term swing, you're going to just be holding it. So then when it comes here, obviously you could have your stop like above the high. Sorry, it seems like it cut this off, but this high of 327 and never got any higher, even though it did cross this area a little bit. So even if you got in your short here, you would still be in your short here because your stop obviously wouldn't have been hit. And then obviously things started happening, the market started moving down, Corona, things like that. And so then when it starts moving down, just like we do with our smaller time frame market structure, you're going to want to look at your bigger time frame market structure. So obviously, since this was the middle of November, since this level middle of November, can we break it? And like I've said before, if you could take some money off here, obviously you could do that knowing that this is a really strong area. But if it does break, then you're probably going to get a nice move down. And that's exactly what happened. So this is a triple top, how we've talked about like double bottoms and double tops. This is a triple top because it hit it 3 times, which means it's really, really strong resistance and it's probably going to turn around. We just have to see if we can break this structure down here and actually get through this level. And it
Gotcha.
did. It looks like it happened over the weekend because like this was the end of a week and then it opened up, it kind of gapped lower. So there might've been like some bad news, but you know, with a long-term play, you're already in this. So it doesn't matter, you know, the weekend, it doesn't matter that you're not like jumping back in on a Monday, you're going to be in this already. So you're going to be waking up on Monday like, ooh, like that was a nice gap down and I'm really in the green now. And then at this point, you could move your stop to above this level because now you know this was such a strong area that it wasn't breaking through. Now that it's finally broke through it, it's going to become resistance because now we're under that level. So you could set your stop above this area, even to like maybe the bottom of this candle, you know? Does that make sense? And so from here, it just continues down. Your stop would have never been hit. It came back up and it touched this area. So maybe down here, you could have had this, see this level right here, John, you would have had this pulled over from here all the way back from the middle of December. See this? Yeah. So you would have had this really strong level on a 4-hour chart saying, if we come back to this 260, I might want to take more off because this is a really strong level. And obviously it was very strong because then for the next like few days, it ran all the way back up to 300, 305.
Okay. That's awesome.
And then, you know, so this is just the market structure with the long term is really just not necessarily if you want to hold ES and you have the money to do so. Obviously, some people do that. I'm just not holding anything like kind of overnight or over the weekend because of the volatility that's going on. But when it comes to a stock or something that you think really has longer term potential, you want to do this market structure on a higher time frame and really see the really big levels because you don't want to get chopped up in the small levels. You don't want to be like, oh shit, let me sell after $5 because you know it's not going to be profitable and it's not a good idea on a higher time frame because if you're willing to hold it for a month or 2 months, then you want to look at a higher time frame.
Okay.
Make sense?
No, totally does.
Yeah, so this is, so just going through this a little more. So obviously it hits this resistance, which is really strong, still wouldn't have been stopped out, moves back down, goes a little higher, and then finally breaks this structure and continues moving down. It pops back up a little bit, but we're still making lower highs here. So this was the high, and now this is the high, and this is the high. They're all lower than each other. So it's still confirming that we're in a downward move. And then obviously it hit this bottoming here, and then it came up and touched this resistance, came back down. But then do you see at this point, John, where it hit this resistance, but when it came back down, it's not making a new low.
Right.
And it's not even making the same low. So if it made the same low, that would be a double bottom, like that would be a double bottom. And then that's a strong indicator for going up. But also this is a strong indicator for going up because it's making a higher low. So while this is the lowest low we have on our screen,
I gotcha.
If it can't break this, then we're most likely turning around.
Okay.
So,
no, that makes sense.
Okay, so this is a higher low. So then at this point, you should be like, oh, you know, things might be happening. And then it breaks this structure and it breaks this structure that it couldn't break before. So we're definitely moving up in a higher motion here.
Okay.
Does that make sense?
No, totally does.
Are you okay for time? Do you have to
no.
like family dinner or something? Okay.
Nope, totally fine.
All right, so let's do, so that was on a 4-hour. Let's do you have a certain stock you like or that you want me to pull up?
Let's see here. Twitter, TWTR.
Let's do it on a daily. Okay, let's look at Twitter. All right, so this is going back to August. So let me take a picture of this. Is Trump speaking, by the way? I'm assuming he's going to be talking again tonight.
He is currently not speaking according to on my top monitor. I just have YouTube up there. Let me make sure. No, Trump is talking right now.
Okay, all right, so it's fine because
Or at least they're broadcasting, or Fox is broadcasting.
Right, like maybe he hasn't started yet, but all right. So this, gonna move up here. This is a little sideways, and then pretty much moved up to the high here at 45.86, and then since then moved down. Well, look at that. What was that gap down in October? Was that in earnings? Oh yeah, look, they had earnings in October. I guess that wasn't very good.
Oh, okay, because that was the 17 cents. That's the dividend. Do they give a dividend? Okay.
Yeah, and then usually I think one of these it just means like it will show you the date and the time of the earnings that's coming out. This is really sideways for multiple days, so we're really just going to use this line, and then we can really just bring it up to here. So we'll use this across because all of this was pretty much insignificant where it stayed sideways. And then from here, we had a dip, and then we came back up. But this was a lower high. See that? So this high here, lower high, continued to move down, pulled back up a little bit, even a lower high, lower lows, and then it broke through the structure. Moved up a little bit because we're always going to have pullbacks, and that's what you'll see in the EF today. It's going in one direction, but then you're going to have your pullbacks, and it could mean things are changing, but it could also just mean it's just a pullback and a retest, and then it's going to come back to what it was doing. So, so these are levels that you should have marked. It's like 38, 37. Hold on. No. I want to move this arrowhead. Oh, whatever. All right. I wanted to see if it touched. I think it's like this area. I think it's touching there. And then this one. Obviously, the low down here at 20. Seems like 23, 25. So this is pretty much this one. I just want to be able to move it, and I really can't. Okay, maybe I can adjust it from here. Anyway, all right, and then I would say this 39, 40. All right, so when it comes to Twitter right now, like from pretty much the middle of last year to today, it was trying to move up. It made a new high, and then it had a big drop at earnings and move down. And like you could have, going into earnings, you could have kind of seen this.
Yeah.
It's a little hard. Obviously, it broke this market structure on this day, so that was like 9:21, and they didn't have earnings until like 10:20. So you could have seen that it broke market structure here, and then it was pretty much sideways in this line, a little bit under, and then just the day that it had earnings, it just totally dropped. So obviously it broke through structure, but not in the typical way that we see it. And then it just stayed sideways. So at this point, if you wanted to play it afterwards, I don't really know, because it made such a big drop. You would have to see kind of what it does on a daily basis. Like it came up to this level, but it really wasn't doing much. Like it was making a little bit of higher highs. So this is a higher high than here. And then here was a higher high, and here was a higher high, but it was so slow. Like obviously when it makes a big drop like that, if you think the company is good enough to like come back and make a comeback, then into the next earnings, like it did here, and it jumped up, then obviously you could have taken the long. And then obviously with Corona started happening again, everything in February. But once it jumped up here, then it moved down back under this market structure, moved back up. And then this area from the last earnings, it this was a pretty strong resistant area because it hit here and then it moved down. And when it moved down here on like 222, it broke this market structure, touched this level that it had been sitting at for so long, moved back up to this resistance, which was from all the way back here in July.
Yep.
Hit this resistance from July and then moved down, broke this market structure. So if you see it hitting at this point, you know, I don't know. I might have taken a short here because it's not getting through this area and then it's moving down through this market structure. Obviously it would have, if you, depending on when you get in here, would have gone against you a little bit. But if you got in like right at this area,
Yep.
which is a level from July 19th, then that's a pretty strong area. If you could say, hey, if it breaks this area from July 19th, that it only has been over for a little bit, because really it only popped up here because of earnings. So if your theory could be, you know, it dipped back under, came back up, and now if it comes back under again, is it going to stay under? You know, this is a pretty strong level from all the way back in July, and it really only popped up because of earnings. So are people really holding? I'm not sure. Like, is the company doing, you know, better things? I'm not sure. And then it moves down, it hits this resistance from July, and then it continues going down. Obviously a lot of this downward movement is because of COVID, but
Right.
the market structure will tell you if it's breaking. You know, if it was going sideways, that's one thing, but it is breaking structure. So and this is on a daily, so if it's breaking daily structure, it's pretty strong.
Okay. No, that totally makes sense.
Okay, cool. So yeah, so you can do this with, you know, look out for like the last 6 months, the last 8 months, whatever, and kind of see what you would do. And like, obviously here it's having higher lows now. And obviously as things are turning around, if it broke this market structure here at $30, I might get in for a long-term long. You know, I'm sure they have earnings coming up in like May or something. You know, see if it pops it back up to this $38, $40 area. Because that's, you know, that's a $10 move. And if you have an option on it, you would make a good amount of money. So, yeah.
That totally makes sense.
Do you want another example? How do you feel about this longer term analysis?
I think I'm good. You know, it covers a lot of the same. It really covers a lot of the same concepts that we look at from a short-term analysis. It's just that the it's a longer perspective. The investment vehicle is a little bit bigger, so to speak, or from the standpoint of you know, a stock and just the intent to hold it longer. Yeah, no, it completely makes sense in the way that we've been looking at it. One thing from just as a pure technical feedback. I'm presuming that that the screen that you're looking at has multiple lines drawn on it.
This one?
Yes.
Ooh, what do you mean?
Were you draw? I guess what I see from my screen as well too. I see the like the drop off in earnings there. They have 2 red lines. Were you drawing any other lines on there as well?
No, I don't know if I used Twitter for some other reason. If the other person I used in an example, if I pulled it up that way, or I was day trading stocks like a year and a half ago, so I might have been charting this out for one random moment.
Okay, no worries. I was just concerned that you were trying to use the Thinkorswim software there without and the Zoom meeting wasn't capturing a line or something. I've seen that with some applications; they don't capture certain things, so to speak. But
yeah,
I could.
I only have these two. And when you zoom to like daily, it gives you kind of like monthly, I guess here, these monthly lines.
Yeah.
But yeah, you know, and then the yearly.
Okay.
But, yeah.
No, totally good. Makes sense.
All right. Well, I know we didn't cover like too much in this, but I feel like you're picking up really well. And in the next session, we're going to do supply and demand, which will be a really, really helpful tool that you can use or not use, but it's really good to help to find areas of like institutional buyers or sellers. So you'll know if an area is coming up that you may need to get out of the trade because there's going to be a lot of buying or selling from these big things. And so if I remember, I sent you a video on that too, I think in the original email. So if you want to do any type of YouTubing, watching, you feel free to do that. There's some really good resources out there, but we'll be going over that the next session. And then, cause this is our third, right? So then, so supply and demand will be 4th. And then the 5th we'll do like the W's and the head and shoulders and the M's, and double tops, all that. And then the last one, we'll just do some indicators. So
awesome.
All right. Well, that's good. I'm glad we got to do it. Sorry, I was a little late from the client call.
Yeah, no worries, no worries at all. Totally easy. Sweet. Well, let me jump off here. Get the little one over here off and running, and take a look at some evening trading, and we'll be back at it tomorrow.
All right. Yep. And I will post this video up in the doc area, whatever, and I'll send it to your email.
Awesome.
All right. Thanks, John.
All right. Have a good night.
Bye.
Bye.